What does true economic resilience really look like in a city constantly navigating global shifts? In early 2025, Hong Kong's GDP surged by 3.5%, a notable increase that caught the attention of economists worldwide. This impressive growth signaled a powerful comeback after years of turbulence and uncertainty, marking a turning point for the region. This isn't just a number, it represents something far more profound. It's proof of a city that's adapted to new realities, leveraging its financial expertise to navigate complex global markets, resilient workforce, always ready to meet new challenges, and targeted policies designed to reignite growth and foster innovation. Hong Kong is reclaiming its status, solidifying its position as a global financial center, a vital hub for international trade and investment. This resurgence isn't achieved by ignoring past challenges, but by tackling them head-on with data-driven solutions and forward-thinking strategies. The city's unique position as a gateway between China and the world, a bridge connecting East and West, has turned vulnerabilities into strategic advantages, creating new opportunities for growth and development. This has been fueling a remarkable turnaround, showcasing the city's inherent adaptability. By focusing on core strengths, the pillars of its economy, finance, logistics, and professional services, while embracing technology, particularly in fintech, and championing green finance initiatives, Hong Kong is crafting a new narrative of sustainable growth, one that prioritizes long-term prosperity. Let's explore the data, diving deep into the numbers drivers, the key factors propelling this resurgence, and decisions that have shaped this remarkable recovery, powering Hong Kong's economic momentum and setting the stage for future success in 2025. To truly understand the resilience and current strength of Hong Kong, a global financial hub, we must take a closer look at the significant headwinds it has successfully overcome in recent years. These challenges tested its mettle. The global pandemic brought tourism and retail to a virtual standstill, causing a sharp GDP contraction and forcing many businesses, both large and small, to struggle for survival. Furthermore, escalating geopolitical tensions, particularly those between the United States and China, created a climate of considerable uncertainty, leading to noticeable capital outflows from the region. This situation presented challenges to Hong Kong's autonomy and its overall business environment, impacting investor confidence. Compounding these issues, a talent exodus saw many skilled professionals leaving critical sectors like finance and technology, leaving companies scrambling to find and recruit qualified workers to fill the gaps. This shortage forced the government to urgently rethink its immigration and talent attraction policies. Meanwhile, regional rivals, most notably Singapore, strategically seized the moment to their advantage, actively attracting businesses and top-tier talent with promises of greater stability and favorable conditions. Hong Kong realized it could no longer take its long-held status as a leading financial center for granted. It had to embrace innovation, adapt quickly, and compete far more aggressively on the global stage. The city's response involved bold and decisive policy shifts, proactive talent attraction initiatives, and a renewed and strengthened focus on its unique value proposition as the primary gateway to mainland China. These strategic moves have collectively set the stage for the impressive economic recovery we are witnessing today. The numbers tell a compelling story, painting a picture of resilience and forward momentum, a story of stability and sustained growth in the heart of Asia. In 2024, the gross domestic product grew by a robust 3.2%, and the economic momentum continued strongly into 2025, showing a 3.5% growth in the first quarter. This recovery is broad-based and inclusive. Exports are experiencing a significant upswing, and private consumption is rebounding with renewed vigor. The unemployment rate has notably dropped to 2.9%, signaling not only a tight labor market, but also a resurgence in consumer confidence and spending. Inflation remains moderate and well managed at 2.1%, allowing for a stable and predictable monetary policy, which in turn ensures predictable borrowing costs for businesses and individuals. Fiscal discipline is back in focus. After the necessary pandemic deficits, the government's debt-to-GDP ratio stands at a comfortable 15%, giving it ample room to strategically invest in key priorities and future growth initiatives. These strong fundamentals, growth, job creation, and fiscal health, are the very backbone of Hong Kong's renewed and growing economic confidence. The city's prudent ability to effectively manage both inflation and interest rates has contributed to stabilizing the property market and encouraging further investment across various sectors. Hong Kong's commitment to responsible public finances sends a clear and powerful message to the world. This is a city strategically built for long-term stability and prosperity. The recovery is visible across Hong Kong's key sectors. The Port of Hong Kong's container throughput jumped 8% year-on-year, powered by stronger trade with ASEAN and the mainland. Smart port initiatives using AI and IoT have made logistics more efficient, reinforcing Hong Kong's role in global supply chains. Tourism is back. Visitor arrivals in early 2025 hit 80% of pre-pandemic levels, and retail hubs like K11 Musée saw a 40% surge in sales. Major events like the Hong Kong Sevens and Art Basel are drawing crowds, reviving hospitality and retail. In finance, the stock exchange is a magnet for tech and green IPOs, and cross-boundary wealth management is booming. Talent attraction schemes have brought over 100,000 skilled professionals back, filling critical roles in finance and tech. These real-world wins are fueling Hong Kong's resurgence. Hong Kong's rebound is powered by smart, interconnected policies. The government's $10 billion push into the northern metropolis is creating a tech hub linked with Shenzhen, attracting startups in fintech, biotech, and AI. Public-private partnerships are driving investment in green finance, with green bonds funding sustainable projects and drawing global capital. Property market reforms, removing stamp duties and cooling measures, have sparked a 50% surge in transactions, stabilizing prices and boosting related industries. These policies reinforce each other. Tech growth is supported by affordable property, and green finance attracts sustainability-focused firms. The result is a holistic blueprint where technology, finance, and urban development work together for durable growth. Hong Kong's integrated approach is setting a new standard for modern economic management. The city is positioning itself as Asia's innovation and investment powerhouse. Despite the positive momentum, risks still remain a factor. Geopolitical tensions between China and the West could disrupt vital capital flows and challenge Hong Kong's crucial role as a global bridge. Heavy reliance on property-related revenues makes public finances vulnerable to market swings, despite ongoing efforts to diversify income sources. An aging population threatens long-term economic growth, shrinking the workforce and increasing the demand for public services. Strategic talent importation certainly helps, but a sustainable, long-term demographic strategy is needed. The financial sector faces rising regulatory scrutiny and increasingly fierce competition from rival hubs. Hong Kong must stay agile, updating regulations, deepening market liquidity, and innovating to maintain its competitive edge. Vigilance and adaptability are absolutely key to effectively navigating these persistent risks. To secure its future, Hong Kong must double down on its role as a superconnector bridging finance, technology, and talent between China and the world. Creating digital free trade zones and leading in cross-boundary data and AI will give Hong Kong a unique edge. Economic diversification is crucial. Incentives for biotech, advanced manufacturing, and creative industries will broaden the tax base and reduce reliance on property. Introducing a low-rate consumption tax could stabilize revenues and fund long-term investments. Addressing demographic challenges means making the city more family-friendly, investing in automation, and encouraging older workers to stay active. The city's rebound in 2025 proves its resilience and adaptability. By innovating, diversifying, and managing its unique position, Hong Kong is laying the foundation for lasting prosperity. The future is bright for this dynamic global financial center. For more data-driven insights and global market breakdowns, subscribe and turn on notifications. Stay informed, stay ahead. This is Economics FX, where clarity meets strategy. Until next time, trade smart.